Good Fed Day, my trading warrior brothers and sisters. How's everyone doing today? This is a day where preparation is so important so that you're able to react to the reaction. My advice is not to just gamble on whether what Powell's going to say, because even if you know what he says, you don't know how the market's going to react. So I would definitely pay attention to your technical levels prior and have some potential entries lined up in your thinking prior to the reaction to not just the Fed announcement, but most likely more volatility during the Fed presser. Okay, so I'm not shaving until after the Fed, and you know what? I'll prove it to you. See? So just call me Graybeard the Trader. And I'm ready to trade the Fed. I love Fed days because they're very good days to fade into certain levels. So my expectation is that the market is expecting something to be dollar friendly. I mean, that's the way the markets are acting right now. This was something I was hoping was going to happen after the Fed, the 61.8 retest. We'll see what happens. But to me, this still looks like a descending triangle in Euro Aussie, and breaking 56.50 is going to give you some nice downside targets all the way down towards here. So we'll see if I could finesse an entry. And also, those of you watching us on YouTube, I'm around for the Fed, but I won't be broadcasting. But you'll know my thoughts and the thoughts of the team by logging into TradeGate Hub, and I'll be posting some charts post Fed about the action that's happening and how I'm reacting to it, just to kind of. Uh, what could I say? Just to get ahead of what might be happening here. I'm thinking that if we get dollar strength, that the euro is going to be a buy down here around 20 and a half. This is like a slow grinding to correction here from the 2260 level. I'm looking at about 2040 as a possible buy zone. Want to see how it reacts to this line, and you could probably use stops under 120. Okay, so we start taking out the daily 200 day. That's at 1994, and not just trading there, but closing underneath it by the end of the day. Then something else is happening for deeper correction. It's still my narrative and bias that we're going to take out the 89.20 low in the dollar. I'm not saying we can't go to 91 first. That's probably where it'll go to if the euro is going to pull back to 2060, 2040. Um, but it is my contention that we're going to make a new low. And that means if I buy the euro right, I should be looking for new highs, thinking about 124.50 if the 120 level holds. Looking at the yen, I've been talking about the yen being able to make one more drive to the upside. I still think that's a possibility. And I may even be looking for some type of short in the yen if I get the right RSI readings. And, this is pretty classic three drive to a top formation. You've seen plenty of them over the months that I've been broadcasting here. So that's going to come in right around 110.50. This is a 4-hour time frame. And that means initially you'll get some type of knee jerk reaction in yields to go higher. I know a lot of people are looking at the 10-year and as some type of bull flag here. Here's your 10-year yield. You look at the daily right here, and some people are saying that this is a potential bull flag. You have this here on the weekly. We're back at major support resistance, and they're thinking this is a continuation formation. I actually still think there's a shot for 130 or so in the coming days, and this may be exactly what knee-jerk reaction. Maybe we get a pop in the yields back towards maybe 158 or so. back over 160, I have to give the yield bulls the benefit of the doubt for new highs. So here's your reaction level. 160, we should not close over 160 if rates are going to continue to correct lower towards 130 or so. That's your line in the sand. We get through this, we're probably heading up towards 2% on a breakout above the upside. Aussie acting a little better than Euro today. Euro down 12, and that's why Euro Aussie's under pressure. Aussie actually got all the way down to the 78.6 level. Okay, so Sunday night I bought it here at the 61.8, pulled out 20 pips or so and got out of the way. And then yesterday we had a pull back to new lows, which held 78.6. So we got a decent rally, about 40 pips. And, we could very easily test this again, some type of triangle developing here. But, the Kiwi looks interesting to me. And here's why. See this? So this was the major support level. This is drive one, okay? Confirm low. Everyone see this? This was a confirmed low. Maybe if you go all the way back here, it wasn't. It was a little divergence, but it's close enough to be considered a confirmed low. Then we bounced, and then we had this low here, which is above 30. And if the Kiwi breaks one more time under 71 and the RSI holds above 30, which is this level here, posts a higher low or equal low at new lows at 71, this too could end up being a buy. So that's something I'm looking to fade too. So my two preferred long fades are long Euro and long Kiwi. If the dollar pops after the Fed on any talk of taper, Canada, I suggested going to the board on to the door on at least half after this breakout that we had late last week. Pretty good trade, 120 pips. To me, it looks like we could have a 1, 2, 3 up here. This is 1, this is 2, and targets up around 122 and a half, 123 up here during if the dollar initially starts off stronger after the Fed. And I think I'd go the door on this as well. If you're still holding a piece into the Fed and we get a rally towards 22 and a half, I would consider banking it. Here's a daily. This is your 50-day moving average. Look at that. What a coincidence. 122.55. We clear 22.55 and you could really declare a bottom in Canada. What I'd like to see is a dollar breakdown, take out 89.20 and Canada not make a new low. So this is what I'm thinking here in Canada. At least not a position. I don't really want to fade Canada because it's so crowded on the short side here and bullish Canada, but USD CAD bearish that, we could have a squeeze if we get above here. But anyway, this was a very good signal. It worked. There was no heat. You should have at least 60 to 90 pips from Thursday, Friday's action, and you never go broke taking profits. Here's Swiss, and maybe the Swiss has a shot up here as well, but I'm not expecting these highs to be taken out. Not doing much in the Swiss these days. It's kind of a inverted look of the euro. So euro, you guys know I'm looking for about 60 pips lower from here. Same situation in the dollar. Looks like this is 1, this is 2, and this may be 3 up towards 91. And something that I teach my mentees that is really interesting is that if you look at a big picture, this is 1, 2, 3, and we diverge. But sometimes on the third drive, you actually get a fractal of a third drive. See, this was 1, right? And, it didn't do anything but peak and drop. This, it peaked, it pulled back, it rallied for drive 2, it pulled back, and we could be setting up a drive 3 up here, and that would be, a short in my view. One of the reasons that I don't think the dollar is going to begin a big bull move, because that would represent the end of this melt up in the S&Ps and NASDAQ. And the NASDAQ has made a third drive up here. See, yesterday. Okay, so we made new highs. We diverge on multiple time frames, except the 4 hour, which tells me that there still could be another high. See this? The real simple implicator would tell you that NASDAQ isn't done. For weeks, I've been talking about the potential of 14.3, 14.4 before this NASDAQ rally terminates. I still think that's a possibility. So they may try and sell equities off on the Fed statement, take it down to 13.9. S&Ps, the RSI is a lot weaker. Still my contention, there's a shot for 43.14. And I just don't see that happening. So unless the market, I don't see the S&Ps topping right here. And that's why I don't think the dollar is going to, that this is more than a bear market rally in the dollar before we have one more low, because a big dollar rally is going to crimp risk. So the dollar rally begins with risk off. And I just don't think that we have attained the objectives that I'm looking for in the NASDAQ 100 and the S&Ps. So based upon that, I think that this dollar strength, even though it's a very crowded trade, short the dollar, is not over until we make a new low. In fact, I kind of called this whole rally that we've had in the last month maybe a wave four with one more low to come. So you will see. We're challenging this 50-day right here. So no positions going into the Fed. Looking at the way the market's trading is that the dollar may pop and looking to take advantage of it. So what does that mean for the metals? So taking a look at gold, look how it keeps playing with this major trend line break. We had this nice spike. I believe it was Monday, where we held this breakout. We may be in for another test, but if we start closing under 1840, you have to say that this gold rally is in trouble and we could have a deeper correction here. Actually, the silver is so much stronger as expressed, and this was a heads up for everyone last week when we couldn't close over 68.5, and I said, this favors silver longs and gold shorts, and that the ratio could still head a bit lower. In fact, there's almost a shot for it to trade all the way back down to 60. I'm wrong if we start closing back over last week's highs at 68.5, 69. But when the gold silver ratio is trending down, silver is your preferred long, and when you're bullish in metals and when you're bearish in metals, playing the short side, that would be gold. And it's expressed just on today's action, where you have silver up a dime and gold down $1.60. And I think on Friday, one time, gold was down $25 and silver was still unchanged. So relative strength and preferred long continues to be the silver market. I want to take a look at euro pound, because this too could set up some type of buying opportunity here. Because the euro is weaker than cable, I'm thinking that we have a chance to trade down towards this 85.40 level, maybe 20. And this could be a nice trade with a risk under the lows, under uh, 84.96. So I'll be watching this blue speed line and the 78.6 level around 40 for a potential buy, because I do think that if we do get one more decline in the dollar and a 124.5 euro after this decline, that euro pound could rally maybe back towards the 88 level. It's a major resistance level where we get something like this from down here that could take us up above these highs. Everyone with me? Any questions so far on any of the instruments that I've covered? Okay. How about this? What do you guys think about this? Can you tell that the best traders I know are hardworking traders? Okay. It's not easy. Anyone trying to sell you the secret to trading, run away from it. And here's one of my more famous quotes that I prepare people with before they get ready to assume risk on leveraged instruments is there is no secret. The secret to trading is there is none except hard work, perseverance, and living through adversity. If that scares you, do something else. Okay, just wanted to, you know, bring a little dose of reality to the trading business, because everyone's hearing about, people making hundreds of thousands in meme stocks, etc., in crypto. It's usually not that easy. In fact, I grind it out. I'm happy to do 30-40% on my money a year. Hedge fund managers do cartwheels with those kind of returns. You're definitely beating the S&P. But a lot of people talk about having 500% returns, 1,000. It can happen, but if you're using that type of extreme leverage, it could also work in reverse. So let's get back to the markets here. Oil has been relentless. Okay, and I know because I've tried to top pick it a couple times. We are diverging on the daily between this high and that high. But it's over 70, so really not that ideal. And then when you take it down a TF to the 4 hour, even the 4 hour is above 70. But I think we're getting close. I know a lot of people are talking 75, and we're only a few, could be there in a couple of days. And the 15-minute, it looked like we were going to have a little 3 drive, and I'm still not sure this is it. I think that we could probably trade higher. I'm going to wait for crude to do something wrong, and it hasn't yet. I would say your first sign of there's a problem in crude would be closing back under 72 and 71, and definitely taking out 70.38 could lead to a correction. And when you think about it, perhaps if I'm right, perhaps if I'm right, because I never know if I'm going to be right on what I'm looking for. If the S&Ps after a pullback today still have another 70 handles or so to the upside, perhaps crude, which has been part of the risk on trade since COVID, and one of the better performers in the last quarter, the oil shares, that perhaps we don't have a top in the oil market until we have a top in equities. So right now it's in IDK, and IDK for me is I don't know. I'm never afraid to say I don't know. I'm also never afraid to say I was wrong. I was stopped out. If you're on Twitter, you never really hear people or texting that, I don't know, because then people feel like they're, incompetent because they should know everything. There are times that it's wisdom to admit you don't know so that you don't force trades. And everyone is wrong in these markets. No one bats bats 1,000. If you have a hit rate over 50% and you have good risk reward ratio trades of 3 to 1, say you're risking, $500 to make 1,500, you don't have to be right more than 50% of the time to be showing returns. But that's the important of the RR part of the trade. What are you risking and what are you looking for if you're right? So let's continue down the road, and I'm paying very close attention to the VIX. And I want to talk about the VIX a little bit here. I still think that there's another low, but I want to point your eye towards these candles here. So it started here near the end of May. You see that wick? You see this 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 wick? All right, so all of these happened near the opening when the market was coming in higher. And I saw this type of wick action where, I'm surprised if there was hardly anything even traded down here. Almost looks a little manipulated, that it's all, no bids, all offers. And maybe one guy comes in and says, oh, okay, I'll just buy it. And, I'm not sure I would need time and sales, but I'm making this point is because I was seeing the same type of wick action. I call them ghost trades happening in silver as it was trying to bottom. So, if you tried to buy this break, I doubt you got filled. If you tried to buy this in the morning, I doubt you got filled. So, this is telling me that it's being accumulated. I still think that we could have one more low in the VIX. Right now, this wedge line, I have to extend it out now, is coming in around 12. Okay. So 12, that's quite a break from here. We'll see if that happens. If that's not going to happen, closes back over. You could tell this was a death cross right here. But if we get back above this 19 level as my pivot, then the correction is underway. We have to close over this. But I wanted to point out these type of ghost trades that I'm seeing here in the VIX, which has me looking for a low, although I think it's going to be a lot lower before it's over, especially if we get the numbers that I'm looking for in the S&Ps. Just a quick look at SQQ, which is triple bearish Qs. We're not diverging yet on the triple Qs. I'm looking for about 970. I have some different fib extensions here on the downside. Let me show them to you. There's 973 and 934. So these are a few levels. I figure if the NASDAQ gets up to that 14.3 level, that's 220 away, that maybe we see at least 974. So that's going to be something that I'm going to be looking at as and an instrument I'm going to use for trading what I think is going to be the third drive to a top in the NASDAQ. Yields, we've had a nice little bounce in yields. I don't know if it's going to continue for a bit longer, but I do think to finish off this wave in yields, that we, still could have one more low, that this looks like a 4, and there could be one more shot down. But again, like I showed you the 10-year, to me, this is an I don't know as well. Although if we broke and traded down here towards 120, 130, you would think that would be supportive of equities unless bonds are rallying on a flight to quality. So let me just say something. I have conviction on a couple of instruments, never on all of them. And I knew traders when we used to have floor traders that would stay in one trading pit their whole career, and they didn't diversify, but they knew one market like the back of their hand. So my advice as your trading coach, especially if you're fairly new to the business, is to pick out no more than 3 instruments to follow. and something that you have an interest in so that you really are following it. You're not just doing the charting, you're reading the news, you're learning the fundamentals behind that instrument, you're learning the correlations that it has with other instruments, and you know every major technical area like the back of your hand. There's an expression that if you can't remember the last trade of an instrument, you're trading too many instruments. If you don't remember the last, say at the end of the session, then you're trading too many instruments. Um, and you know, it's important to really get the feel. And if you're trying to be a portfolio trader off the bat and have 8, 10 positions working, I think it's going to have an impact on your focus. And you know, I even say this to advanced traders that maybe pare down your universe of what you would trade. You could look at the other instruments for correlations and maybe give you a market tell on something that you are trading, but limit it. Become a specialist, not a general practitioner. Become a brain surgeon, not a doctor that you go see when you have a sore throat. Okay, become a heart surgeon, not someone that you go see to give you blood pressure medicine. Okay, so become a specialist, and to do that, you have to pick an area, 2 or 3 to trade with. So that's my advice for today. I'll be back around Fed time posting here. I want to wish everyone good luck. Know why you're getting in the market. And if you know why, then you know where you're wrong. If that contingency is negated, and know what you're looking for if you're right. And always take partial profits. Our mission here at TradeGate Hub is to build up and edify traders every day. So don't just count your pips, count your blessings. Good hunting to everyone here. Good luck on the Fed. I'll see you tomorrow. I have an interview with Raksha Soni, an excellent trader I've interviewed over the years, who has one of those algos that they call Boomi, and I've seen Boomi perform and give some great signals. So just a little advance notification for tomorrow with Raksha Soni. See everyone tomorrow. Good luck with the Fed. Adios.